Hey traders, welcome to this video on my favorite market to trade. I really think this is, in my opinion, the best way to trade, and it's definitely my favorite, and I'm going to show you why. So we'll just give you two reasons today. I'm going to do a little series on this actually. So today we'll cover two things. Number one is I love to trade options. All right, now with options, there are several different things that we need to take into consideration, but I'm going to keep it real simple today just to point out a couple of benefits. So number one, well, let's look at a chart here. So we got Starbucks, we got a daily chart. So if you were to buy Starbucks back here, it's about $85, $86, let's say 86, 87. Okay, we'll say 87 for the sake of argument. And so to buy just 100 shares of Starbucks at $87 would cost you a lot of money, $8,700. So, and that's just for a very small position in just one stock. So the first point is that it takes a larger account to trade stocks than it does options. So as opposed to investing $8,700, you could have just bought a call option for $265. That's it. That's what it cost that day, $265. So pretty darn cheap. I mean, huge difference, right? I mean, just ginormous difference, not even close. So if you have a small trading account, then options are one way to be able to trade and, by the way, control the same asset at the same price, but spend less on it. And that's because it's leveraged. You got lower margin on it. Now, of course, that leverage is a two-edged sword. I want to be very clear about that. That leverage is a two-edged sword. So we'll get to that in just a minute. But the first point here, let's just let this one stand on its own right away. Now, of course, you can trade less expensive stocks. So that's one thing people would say, well, gosh, why would I trade an $80 stock if I could trade a $2 stock? Well, good question. First of all, you can trade less expensive stocks and then not have to put up as much money and not need as big a trading account. Now, when you get down to too small of a price stock, then you get into penny stocks. And unfortunately, penny stocks are pretty easily manipulated. They are very subject to pump and dump. Generally, again, I'm just giving you generalizations here, but too often because they're so cheap, and because they generally don't have as much volume traded on an average every day, they are subject to people coming in, especially, well, I hate to say it, but sometimes people who give trading signals. It has been shown that they will buy a bunch of penny stocks, then they'll send out signals to their subscribers and say, hey, buy this, buy, this thing's going to go up. And of course it does, because it doesn't take that much volume to move it up because it doesn't have much volume every day. And then they can, because it's such a low priced and low volume stock, it's easily manipulated, easier to move it. And then the people who give the signals, then they sell. So that's what a pump and dump is. A lot of you have heard of that, I'm sure. So cheaper stocks, penny stocks especially, are more subject to that. Doesn't mean every penny stock has that happen, but that's something you got to be careful of. And so then you can get up into maybe your $5 or $10 or $20 stocks, but still, you know, $20 stocks going to be $2,000, and that's just for one position for 100 shares. And you've got to then look at money management. So the size of your trading account and how much of your money you're going to risk, what percentage of your trading account you're going to risk on that given trade. So even for people who have larger accounts, it's beneficial to have to commit less. Beneficial to have to commit less. We're not actually buying the stock with options, of course. We are buying the right to buy the option, and that's why you get the leverage. So, but not the obligation. Okay, so anyway, that's step one. Now, step two is you can make more money faster because it has leverage. The key to wealth is leverage. So when you look at people who've made a lot of money, they've always used leverage. People who are in real estate probably made more millionaires than anything else. It's because, why? They can put a small amount of money down, a down payment, and control a large asset. They don't have to buy the whole house or the whole apartment complex all at one time. They put just a percentage down, and then they can control the whole asset. And as it grows, they participate in the growth as well. The same thing with businesses. So traditional businesses, larger business, you have an asset called that business. You leverage it. You hire other people. You leverage their time. You might take out a loan out and leverage the bank's money, or venture capitalists or whatever. So leverage is involved. So you get geometric growth. So options provide that same type of thing. Futures do as well. Forex does as well. We'll talk about that in some future videos as to why I prefer options over futures and Forex. But what I want to point out here, again, just to stay on topic with one point at a time, leverage is provided with options. So, for example, in this particular situation, so we'll just show here we get a Bollinger Band squeeze. And then, let me bring up my little drawing tool here. Okay, so we got a little Bollinger Band squeeze here. Pop out to the top level. This is a well-known setup for top dog traders. And so up we go, up we go, up we go, up we go. This is a typical exit for top dog traders. You guys recognize this, my friends. So, and then, by the way, this is a typical short for top dog traders. Or even there, especially this one's even better. So from here to here, we gained quite a bit, right? We made, there's some good money being made there. If you guys, you can see the prices there. So it's, again, we'll just kind of estimate here that, let's say you made, it went up about 11.7%. Okay, about. Okay, yeah, I did the math. So I actually looked at the quotes from those days. So if you got a good entry, and of course the exact entry, the exact exit could vary depending on when you got in during the day, the bids, the ask, where you got in the spread, all that kind of stuff. So we're not going to, nitpick the pennies here, but let's just say 11%. So pretty good. I mean, that's actually a really good gain, because that's just about in a month or so. Okay, in fact, it's about a month. So 11%, 12% gain in a month is fantastic, amazing. Most people don't make that in a year in the stock market. Okay, now, if you, on the other hand, were to have bought calls here, even just one call, well, whatever, it's going to be the same percentage. So the calls went from $2.65 to $7.35. as opposed to from $86 to $96. So, $86 to $96, that's a $10 move. But that's an 11% move, roughly, 11, 12% move. But on the calls, on the option, you bought it for $2.65. Okay, well, each contract is worth 100 shares, so it actually would have cost you $265. And then it went up to $735. That's a 177% increase. So what would you rather have? A 12% increase or a 177% increase in 30 days? Again, it's not even close. It's ridiculous. So leverage. This is the way you make the big money if you're interested in making the big money. All right. So we're not talking about linear growth. We're talking about exponential growth. Now, again, I am very conscientious that, and you should be very conscientious too about this, that leverage is a two-edged sword. So when the market goes against you, then you're going to lose more. Okay. So when it comes to options, it's very important that you know what you're doing. I don't recommend people start with options for that very reason. And actually, there's a second reason as well. I think it's very important to learn to read the underlying chart before you just learn option trading. Learn technical analysis of a chart of the underlying market and not just option strategies. Actually, I think that's very important. And perhaps we'll talk about that in another video as well. But yeah, you got to become a good trader before you apply this kind of leverage. But when you do, then this is the way to really, really become wealthy. So that's it for this. This is part one of a little series on options. And you can see the dramatic difference. I mean, seriously, if you want to become wealthy, this is one way that you can potentially do it if you become a great trader. And I do want to add that caveat, a real skilled trader, a master trader. And so that's why I love to trade options so much. So, by the way, if you want to get one of my free trade setups called the Rubber Band Trade, and this is a a great trade setup I take all the time, and you can trade options with it. By the way, it's a fantastic setup on the charts to trade options with. I'm going to give that to you for free. So you can start trading this and trade it, paper trade it, demo trade it. Again, we're always very risk averse. Do it on a simulator. Prove it to yourself first that it works. I'm going to give it to you absolutely free because I want you to start making some money before you buy any courses or anything. And you can get that by just clicking on the little icon there in the top right hand corner of this video, and that'll send you to a page. You can choose which market that you trade, and we'll get that over to you right away in a video format. In fact, there's going to be 5 little videos there, a little mini course, including the rubber band trade setup, so that you can start making some money with that. And I'm available too if you have any questions about it. So thanks a lot and have a great day.